everyone. My name is Moe and welcome to another episode of Income Investors. With me today is John Whitefoot with another income idea. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. No matter how safe an investment sounds, it comes with risk. To read more about this, please see the description below. I think interest rates, high inflation are hurdles that can curb economic growth, tip the economy into a recession, and lead to increased household debt. At the same time, the same economic headwinds are what real estate investment trusts, REITs like Arbor Realty Trust Inc., traded on New York Stock Exchange under symbol ABR, such a great opportunity right now. John?
Yeah, you're right, Mo. REITs are a great way, an easy way for investors to own a piece of the real estate industry without having to plunk down hundreds or thousands or millions of dollars all at once. And there are a wide range of REITs that shareholders or investors can look into. You can own anything from industrial properties to hotels, casinos, offices, healthcare, retail, and residential. Equity REITs are probably what most people think of when it comes to investing in REITs, but there's another type, mortgage REITs, which are often referred to as MREITs. Now, mortgage REITs invest in mortgages instead of real estate. They provide financing for income-generating real estate by purchasing or originating mortgages and mortgage-backed securities, earnings from the interest on these investments. Investors tend to love REITs in general because they legally have to return at least 90% of their taxable income to shareholders in the form of a frothy dividend. Better still, REITs tend to perform well in a high interest rate, rising inflation environment like we're in right now.
As I mentioned the name earlier, one great REIT that has been rewarding buy and hold investors with reliable growing dividends is Arbor Realty Trust. John, if you want to elaborate a little bit on this.
Yeah, thanks, Mo. Arbor Realty invests in portfolio of structured financial assets in the multifamily, single-family rental, and commercial real estate markets. It also directly acquires real estate property and invests in real estate-related notes and certain mortgage-related securities. The vast majority, around 90% of its structured portfolio asset class, comes from multifamily loans, followed by single-family rentals at 8% and healthcare at 1%. Land, healthcare, office, student housing, retail, and commercial make up the rest. Its geographically diverse portfolio is located mostly in the South, like Texas and Florida, Georgia, North and South Carolina, though some of its portfolio is located in New York, Maryland, and Indiana. The investment consists primarily of bridge and mezzanine loans, including junior, participating interest and first mortgage, preferred and direct equity, single-family rental portfolio financing, government-sponsored enterprise, and housing and urban development agency lending and private label. The company's $13.6 billion portfolio creates many diverse income streams, generating significant prepayment protected annual income revenue. And that includes around $29 billion portfolio earning around $117 million per year, and $2.8 billion in cash and escrow balances earning $110 million.
And how did they do in the first quarter of 2023?
Well, you would think if you're in charge of a mortgage REIT, you'd know how to make money, and Arbor certainly does. In the first quarter of 2023, net income increased 31% to $84.3 million or 46 cents per share. And the all-important distributable earnings were also up 31.5% at $122.2 million or 62 cents per share.
And now I have to ask this, with solid returns and cash flow, how are their dividends looking?
Excellent. If you're an income investor, Arbor Realty Income has raised its annual dividend for the last 11 years. This includes numerous increases annually. For example, it raised its payout every quarter in 21 and 22. And so far, it's raised its payout both quarters in 2023. For example, in early May, the company announced a dividend of 42 cents per share. That's up from 40 cents per share in the previous quarter. And this works out to an annual distribution of $1.68 per share for a pretty big yield of 13.07%.
And quickly, before we go, how is ABR stock doing?
Yeah. In addition to a growing dividend, shareholders have also been enjoying solid gains with ABR stock up around 19.5% over the last month alone and 12.6% year to date. That said, Arbor shares are down 4.5% year over year, but the outlook remains bullish. Wall Street analysts have provided a 12-month share price target for Arbor stock of $15.50 to $17.50.
John, thank you so much for providing analysis on Arbor Realty Trust, traded on New York Stock Exchange under symbol ABR. It has proven to be a great REIT for providing income and growth. It continues to report strong financial results. It has increased its dividend for 11 consecutive years and has increased of last 13 quarters. And by all accounts, the growth could continue. Distributable first quarter earnings of 62 cents per share were well in excess of current dividend and represent 68% of payout ratio. And that is the lowest payout ratio in the industry. That's it for today. We'll be back with another income idea soon. In the meantime, don't forget to like this video and subscribe to our channel. If you want to read more about John's ideas, you could go to incomeinvestors.com. That's it for today, and we'll be back soon.